Hello traders and welcome to another video review. Today is Thursday, the last day of the October 2024. So let's dig into the news of today. Let's see what the economic calendar has for us. So overnight data Asian session was quite interesting. Industrial production in Japan increased from minus 3.3% to 1.4%, beating the expectations of 0.9%. The opposite was for the retail sales. They decreased from 3.1% to 0.5%, so half percent basically, and it was way below the 2.1% forecast. NAZ business confidence increased to 65.7 points in New Zealand, and private sector credit is on 0.5%. Retail sales in Australia is down to 0.1% from 0.7 last time, way below the expectations. Chinese manufacturing PMI beats the expectations of 49.8 with the actual number of 50.1. Non-manufacturing PMI at the level of 50.2, almost in line with the expectations. Main event of the Asian session, Bank of Japan interest rate decision. The Bank of Japan decided to leave the interest rate at the level of 0.25%, as you can see here. So we will definitely take a look at the Japanese yen. German retail sales in line with the previous reading of 1.2%, way above the forecast minus 0.7%. We are waiting for the CPI data from across the Eurozone, including the European CPI, which is scheduled for release at 11 o'clock, and the market participants expect the CPI to increase slightly from 1.7% to 1.9%. The unemployment rate should stay at the same level of 6.4%. Now, during the US session, we got core PCE price index data from the USA. This data is scheduled for use at 1:30, together with the employment cost index and price index as well. Personal spending data and initial jobless claims and the GDP, all of those data are scheduled for release at 1:30. Very busy time of the day for traders. Chicago PMI is scheduled for release at 2:45. Atlanta Fed GDP now is scheduled for release at 5:30, and the Fed's balance sheet is scheduled for release at 9:30. We are ending the day with the building consensus from the New Zealand, scheduled for release at 10:45. So very busy day. We are definitely going to take a look at the Japanese yen, but we start as usual with the major pair of the Forex market, euro dollar. For our chart of the euro dollar is doing exactly what we said it will do, and our scenario was spot on. We have a bounce, we have a correction where towards the 100 periods moving average, exactly to the pip, we hit the level of 1.0772 and then deteriorate lower. So now what's happened? 1.0840 will now switch the meaning. It was resistance, now it is a support. The next target for the bulls is located at 1.0893, eventually 1.0911, because there is still quite substantial momentum here, and the market wants to move higher in order to hit the extremely overbought market conditions. So this looks like a next target. There you go. This looks like a very promising bullish movement on the euro dollar for today. Please keep an eye on the level of 1.0840, because any breakout lower would eventually make the bears to test the level of 1.0806. Overall, the outlook in the short term for the euro dollar is bullish. Let's switch to Japanese yen, US dollar versus the Japanese yen. What's happened here? The Bank of Japan decided to keep the interest rate at the level of 0.25%, and the US dollar to the Japanese yen is reacting negatively to this situation. We got this gap here. You can see blue rectangle, but it was covered already, so it doesn't actually matter that much. Now, what matters is the level of 151.86 technical support, 151.47 technical support, 150.79, which is 100 periods moving average. Okay, so we got this situation. There is a temporary, let's say, support. All right, not a problem, but we will add one more line here, horizontal line, which will be the technical resistance. 153.89 is the technical resistance and the swing high, so we need to break above this level in order to continue the upside movement. Please take a look at the momentum. There is obvious situation here. We have bearish divergence, new high, higher high, between these highs and the momentum indicator, right? So now the bearish divergence is being basically resolved, it's being traded, and now the bears are in charge of the market, at least in the short term, as the momentum moves below the level of 50. You can see it on the RSI. When we apply the price range data, we can see that the last correction, not the biggest, but the last one, was minus 1.13. Now let's take a look what is the current correction, and so far it's minus 1.18. Well. We can't say that this is equal because this one is bigger, but it's not that big yet, maybe. However, in the terms of the price, this correction took less time, this correction took more time. Okay, now question, is that the top? Is that the swing high? We don't know it yet. We're just waiting for this market to move a little bit towards our target, especially technical support target. Those two looks like the biggest corrections so far. It's kind of I just want to measure the last one here. It looks like this one is smaller or equal, maybe equal. 1.19. Okay, so this one is equal, almost equal to this one. So it looks like the situation with the corrections is not that simple yet. There is no overbalance, no just straightforward overbalance that you can spot on without any other measurements with your naked eye or whatever you want to call it. And it looks interesting. So we are taking the bulls are basically now gave up. Bears are in charge of the market. Supports should be tested soon, or even the 100 periods moving average. We should dive below the level of 50, below the level of even 40, or maybe we'll even hit the extremely oversold conditions. Who knows? It looks pretty solid, this movement here, but the question remains whether the uptrend will regain the strength again. It looks like it will, if we will not break below this low here, 151.47. All right, so we need to take a look at the American economy, and this time we are going to take a look at the US dollar index. Yes, US dollar index, USDX. USDX is here. There you go, US dollar index. What's going on in the US dollar index? Very nice movement to the upside. Just take a look at this. From last low, the price range, last low is September 27th. Towards the October 29th, so that's a month, it's 4.47%. A basket of currencies went lower than the US dollar. US dollar went up, right? So that's a nice result. It's clearly visible on the 4-hour chart, and this day we got the test of the technical support. Why? Because again, let me just mark the test, the support line, 103.93. What do we have here is obviously the situation where we have the bearish divergence or negative divergence, doesn't matter how you call it. It's this time of the this kind of a movement where you got the momentum going lower, and you get the price going, let's say, up or in line. So it's something like this. This is flat, this is going down. One of this is a little bit dodgy. Something is not right here. Okay, so which one is bluffing, either price or momentum indicator, and it's almost always the price. So now it's time for the correction. The market is going lower. We are below the level of 50 on the RSI. We are testing 103.92. Next target 103.56. This is the next technical support. This is the 100 periods moving average support, dynamic support, and the next technical support is 103.38. All right, that's the US dollar index. And now Bitcoin. The Bitcoin is consolidating the recent gains around the level of let's say 72,500, just below 72,790, and it's ready to move higher towards 70 all-time high, basically 73,970. So please stay focused, stay vigilant, because this situation here might be resolved very, very quickly. We might see some sort of the movement to the upside, very strong movement to the upside, breaking the all-time high and creating a so-called short squeeze. So the outlook for the Bitcoin remains bullish. All of these levels here are of course now technical supports. Let me just change these levels. We all know them because this chart doesn't actually change that much. We got the same the chart since the lows of the wave C, and that's last week Friday, I guess. So please stick to the plan that you have if the outlook is bullish and if the scenario is bullish as well. This is not the end of the upward movement. That's my point. We will see another spike to the upside. The question is how big it will be. It might be quite substantial. Then we will see substantial correction. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.